Hey guys, welcome back to another ACY Cast. As you can see here, I have Peter today. Thank you so much to come along with us today, Peter.
Yes, Santos.
We do have lots and lots of things to discuss today. As of the Fed, gold is rising. It has more than 10% already in a month.
Yeah.
So that was a very good allocation on the portfolio if you had it. As euro dollar as well, dropping to lows at 106.12. 106.012. It didn't actually break through the 106 level yet. So we did have China as well, GDP coming higher than expected yesterday, higher US CPIs, higher retail sales. So lots and lots of things to discuss today. We're going to go through an overview. So if you're not subscribed yet to the channel, please subscribe, give us a thumbs up on this video and share this with your friends if you're watching on YouTube, maybe Spotify or other platform, because we do have some other platforms that we run through. But Peter, let me first ask you, what do you think about this economic situation? Is it something that we can, expect something to happen, or is it something unexpected always happen? As we are, I would like to say expect the unexpectable on those situations, because they are pretty hard to actually, say this will happen or that will happen. So in your, as a CFA analyst, what do you think about what's happening at this moment?
Okay, so current situation, I think it's very like the situation which has occurred in 2022 or early 2022.
Yep.
At that time, nobody think the Federal will hike like over 10 times for the interest rate. At that time, I think most the traders, has bet on that Fed only hike 3 times. However, something happened. We all know it is Russia and the Ukraine war. It pushed the commodity inflation, not only inflation.
Yes.
The commodity price goes up, and then the production and also the service. There is a circle in the inflation. And now we can see the service inflation has a little bit going down, not too much,
right.
Still higher than expected. However, another commodity inflation wave has come into us, which was very like times before, right?
Yes.
So I do think people haven't priced in that kind of commodity inflation maybe happened in the future. Especially we can see that Iran has joined the fight, right?
Yep.
And we can say also the France and Poland has been involved in Russia's war. Not too much, but there is a fear, and that fear has pushed gold and oil price keeping going up.
Correct.
That is I think the most important part, and what is pushing the commodity price right now going up. However, there is also another risk. It's Trump. If Trump's get elected, everything will change, I think. Especially.
Do you think it would be better in a sense of changing to better? Because when I started in the market, Trump wasn't in power, so it was right in the election. So and then Biden got in, or another one, I forgot his name. Anyways, so what do you think about if Trump gets elected, right? That there is a possibility for this to happen. We are seeing this right now. They're trying to stop a lot of these, but there's maybe a possibility to this to happen. What do you think it would happen in the economic scenario? Would it change too much? Because Trump has always this rhetoric of that no one would mess with the US because he's a tough guy, right?
Yeah, he said so.
Yeah, he said that. That's his rhetoric.
Yeah.
Right. Very different from what Biden is doing.
Yeah.
Trying to be the peacemaker. As of Trump,
compared to Trump, yes.
Yeah, exactly. Compared to Trump, he's trying to be the peacemaker, right? So we have extremes of both sides here. we have Trump trying to, look, if you come here or if you mess with my country, if you mess with something, it's going to be a problem for you.
Yeah.
So what do you think about that? Do you think if Trump gets elected, will that change a lot the market, or in if it changes, in what scenarios would that change as well?
Okay, I think there is like two parts. The first part is I never believe that one president or like the Republicans or Democrats can truly influence the economy
market, yes.
and also the market.
Yes, correct.
However, many like Trump supporters, why they support the Trump is because like when Trump is the president, they have the best economy, they have the best stock market, and they have the lowest oil price.
Yes.
I don't buy it. I think it's just a normal economy circle,
yeah.
right? So when Biden gets in position, it is because the economy has already been to the lowest point, and because of the COVID, and the economy, the interest rate has going down to the historical low, and it pushed the economy back. So it doesn't matter who is in position. It just matters what kind of circle we are in the economy.
In the economy.
Yeah, that's the first part.
Right now, as you're saying on circle of the economy, cycle of the economy, do you think we are on a commodity cycle? Or what cycle do you think we are at this moment?
So many people are talking about like whether we are hard landing or we are soft landing.
Yes.
I don't think so. I think we are no landing.
No landing.
So especially when we can see another commodity wave has come in. It's not only about the war. It's also about the weather. We can see the coffee bean and the cocoa, also rising crazily. So even rise better than the gold. The percentage return. It's so crazy. So commodity inflation wave is coming to us. Yes, so I think this is the economy circle I'm facing to,
right?
And that's the one part, right? The other part is what will Trump will do. He will limit the immigration. He will increase the trading barrier, which is very interesting. We have already seen that in Brexit.
Yes.
Yeah. So if we compare these two things, like Trump, what Trump say is make America back again, and when the Brexit, they said that take back control.
Take back our country, yeah.
That's all the same, right?
It's all the same.
Yeah.
In the end, it's the same rhetoric. Yes.
Yeah, and also the policy is also the same.
Yeah.
And what happened to UK?
Yeah.
What happened to UK? The GDP not bad, not very good. I think it's the lowest.
Yeah, I mean high
similar with Germany,
yes,
but still the lowest.
Yes.
Yeah, compared to other G10 countries.
Yeah.
And also their inflation, especially food inflation, rise crazily. Now the British inflation is still higher than other G10.
Yes, correct.
Yeah. It is mainly
remembering here that we got 12% inflation last year for UK.
Yeah. Yeah. Right. It is mainly because there are lack of cheap farmer, right?
Yes.
So the food inflation just pushed their inflation further higher. So stop immigration and increase trade barriers will always cause the inflation goes up. So two sides, commodity inflation wave and Trump gets in place, no landing.
And another thing is, if they put more barrier to people to get into US, that means that the services and manufacturing PMIs can have a decline.
Yeah.
Because then we will have more people with money trying to spend, but less people working. Manufacturing wise, this won't be positive, right? So
yes, that's correct. Yeah, that's super correct.
So that's one of the things that get me thinking. Like, maybe, I completely agree with you in the case of it's not the president, it's not the whatever person it is in charge that will make the economy great or bad. Is simply the central bank that it's taking the actions with 7 members, 5 members, 3 members, depends the country, to actually make the country better or make the make the economy better.
Yeah.
So, in my honest opinion, I think investors are not looking to it, because the only people that are looking in thinking that will happen something is the small fishes, because they think that anything can affect the market, while the big investors, they're looking for the bigger picture and continue to understand exactly what we're doing here. Look at what happened on history on UK and look how they are now. Yeah. Well, look what is US trying to do. Look at what Trump's trying to do. Exactly the same what it was happening on UK. So imagine US with a 12% inflation. I mean, they're probably not going to get there, in like no way. But just imagine that 12% inflation on US. It's really out of the mind here, Anyways, so with all of these, let's talk a little bit about the last decision from the Fed, and I want to know as well if you had a time to look at the Fed Jerome Powell speech
statement.
No.
You mean yesterday or last month?
Last well, today. It was 3 a.m. today.
Oh yes.
Yeah, 3 a.m. today. Did you have time to watch that?
Yeah.
Yeah.
Of course.
Yeah. What do you think?
Yeah. Firstly, he changed his mind. Right?
Yeah, yes, he did. Very quick, right? Very quick.
So after the interest rate decision last month, like half an hour later, he said that he still have confidence about the U.S. inflation, even though the first 2 months of the CPI data is over expected.
Yep.
Even though the PCE, the core PCE hasn't dropped as expected.
Yep.
Even so that he has confidence. Not now. He has changed his mind. Yesterday, he think it will be a higher inflation, higher interest rate for a longer time.
Yes. And he mentioned as well last month that he don't think that inflation is going up. He don't think that inflation is going up. And then I saw a meme on Instagram or something. They put the Jerome Powell saying that, well, inflation is steadily there. It's not going high. It's not going up. And then the guy put the inflation chart going up. So it was pretty funny. And we can't say the numbers are lying, because the numbers have been coming 4 months already higher than expected.
Yeah.
All the time higher than expected.
Yeah.
All right.
Although the Federal Reserve actually more care about the PCE, however, I think the gap between CPI and PCE is too much.
Yep.
They will be like getting together. So I think PCE will follow the CPI, not CPI will follow the PCE. So inflation is still higher than expected, maybe in the future. Yeah.
Maybe. And with that, we can lead to the rate cuts, right? Because let's get back here and think on February. January, February, right? Everyone was expecting a cut on March.
Yeah.
Everyone, right? Well, January, we came in with a higher inflation number. We came in with a higher NFP number, much higher. That's fine. We may have a lower number on February. It comes February, higher than expected as well. NFP higher, inflation higher. Well, that's strange. And then it comes March, of course they wouldn't cut, right? Because after these 2 readings high already starting 2024, with a much higher NFP as well, they took a step back, right? So then they were like, we need more data to analyze the situation and blah, blah, blah. And now, okay, the next cut will be in June. And then it goes March, April, nothing happening, all right?
Yeah.
Now they come and say it will be higher for longer. Is the situation that's happening right now seems a little bit uncertainty from the Fed, okay? In my opinion, they are driving hawkish. They are driving hawkish, but it seems that they are uncertain what's going to happen. A little bit out of control. What does that lead with the US dollar and some parities like euro, pound, and Japanese yen? What do you think about this?
First of all, I don't think it's a Federal Reserve mistake or they have experience some unexpected thing.
Yep.
It is because in every statement they have provided, there is one sentence they never delete. It is that we will see future data to decide
yep.
how much interest rate.
Correct.
So what changes is not Federal's attitude. Maybe Paul will say something different, but actually their attitude is somehow constant. What is changing is market expectation.
Correct.
Not Federal expectation. And market expectation has a trend that to feel optimistic in every situation.
The market, you mean?
Yeah.
Okay.
Well, it will be more optimistic because everyone in this market, mostly in this market, are longing the asset.
Right.
So for those longing assets, what they want, cut or hike?
No, they don't want to cut.
I mean, who invested in
assets?
Yeah.
They want to cut. Yeah,
right?
they want to cut.
So
yeah.
they
in
will
assets,
give.
Sorry,
Yeah,
in assets.
every time. So every time they have an opportunity to predict the future interest rate cut, they will be more optimistic than what will in the market. They will ignore those negative signal, but only taking
the positives.
The positives.
Right.
Yeah. However, when things started to go out of their control, every time go out of their control, they will change their mind, and at some point, it's just break their mind, and every asset class will start to going down. Yeah. So that's my thought.
So it believes on a stronger US dollar in the coming, let's say, 2 months or 3 months. It's still believing on a stronger US dollar.
Yeah.
Okay. Cool.
And especially for those stocks buyers, you can see when the bond yield goes up, the stock market, the SP 500 doesn't follow. It is still going up, not going down. Normally, we will say that the higher yield, the lower performance or the worst performance. Yes. Yeah. However, it's not the case.
Yeah.
Maybe you can not blame on AI, or you can say it's AI's fault.
Yep.
AI's effort. Yeah.
Yep.
However, I think people just don't take enough seriously about the inflation.
I think there. I mean, we came all the way from nearly 6%, now to 3%. That's a 50% reduction, but still a lot to be done.
Yeah.
Still a lot to be done, because to get up from 6 to 3, it's easy, but now to get up from 3 to 2 and to 1, it's very hard.
Yes.
Because it's much harder for you to reduce these small numbers than the big number, because the big number is inflated number, and then it will be okay to reduce to 3%, 50%, just increase some like 5-6 rates. That should be due today. Yeah. But increasing those 3%, that's a lot to be done with consumption spending as well. Yeah. Consumer spending. And we've just saw that the retail sales came much higher than expected. 0.7, and the expected was 0.3 or 0.4, somewhere around those numbers. And it just makes me think again, this shows to me again that inflation will continue to go high.
Yeah. And I have a physical example to explain that. It's just like to push a balloon into the water. At first, when you push it, it is very fast going down. However, when it is more deep, it will be much more harder. And one time, it will keep that low, that deep, and won't go down again. Only if you push harder. However, if you want to cut interest rate, it's like you release the hand, it will goes up. So that's why Federal Reserve, even though they don't know where inflation will go, they don't want to cut interest rate right now.
In a sense, they are very data dependent.
Yes.
They're very data dependent.
They're always saying that. But just market don't buy it.
Don't buy it. And this is dovish. Being market data dependent is dovish in the rhetoric. And then when the data comes, then the market decides if it's bullish or bearish. But the market just wants to be bullish all the time. So I guess we have to follow this. We can't go against this huge trend.
That's the reason why one asset class going up, it is slow. When it's going down, it is very fast.
Very fast.
Yeah,
that's true. All right. So we've talked about the Federal Reserve. We've talked about very a bigger picture here. I'm not believing on as well as you. I know you are not believing on a cut from the Federal Reserve in June. So we are pretty aligned on this. Now, some of the central banks are taking the spotlight here as the Bank of Japan, right? Some of the analysts I've been talking to, they think that they will there's a possibility of a hike in June or July.
Yeah.
Right. My honest opinion is that there may be a possibility because the economy is in full employment.
Yes.
Full capacity, so it's working perfectly fine. Inflation is somewhat going up, so in a sense of a good going up for Japan. But the only thing is that Japanese yen is very, very weak. No one is buying it yet.
Actually not.
Because we saw US do
compared to USD, yes, Japanese yen is low, weak. However, when you compare to Euro or GBP, it is not that low, not that weak. So the reason why Japanese yen has reached to like historical low in like 40 years is because the US dollar is too strong.
Right.
Too strong. Not Japanese yen is very weak, but USD too strong. So I do think I will keep buying Japanese yen. However, it is compared to Euro or like British pound. Yeah.
Okay. So in the best bet, let's say like that, USD JPY wouldn't be a good short to have.
Yeah.
Right. Because USD is very strong.
Very strong.
But pound yen is a good short because pound is very weak at this moment.
Yeah.
Okay. Cool. So you believe on a hike?
Yes, especially their wage increase has reached to 5.28%, which haven't been seen like 30 or 40 years. Yeah, that's a big move. I think it will. The main thing behind that is that for the last 30 years, Japanese people don't recognize what is inflation. But now they start to have
not even hike, not even a high rate as well.
They started to have inflation expectation. That's what will push further the inflation. They will buy stuff, they will buy stock, they will buy property.
Yep.
Make the in the last like 10 or 20 years, the stock property market doesn't move up. That's quite weird if you look globally, right? So I think inflation, will goes up. Hike will coming, and Japanese yen, I think will goes up.
Goes up. Compare with some other
pairs.
Some
weak.
Yes. I always said that on my webinars. It doesn't mean that one currency is that strong, and you're gonna trade with another currency. You need to know if the other currency is strong or weaker. You can't put strong on strong. Nothing will happen. It's like positive with positive. You need to find the weakest possibility with the strongest possibility, and then you trade that on the base. If the base is strong, you buy. If the quote is strong, you sell it.
And to increase the win rate.
Yes, to increase the win rate. So I've always been mentioning that on my webinars as well. And it is what works in the market, right? Now, I have another actually two more points I want to talk about. One of them is Bitcoin that I will leave to the end, and another one is gold, and now just China GDP. Surpassing the expectations of 4.8, if I'm not wrong. Let me get
5.3.
5.3.
Yeah,
and it came to 5.4, if I'm not wrong. So let me get numbers right.
Oh, you mean the expectation?
Yeah, the expectation, correct.
The real one, I think, is 5.3.
Yeah, so the year over year, right, it came at 5.3%.
Yeah.
So that's a pretty good number. And the consensus was at 4.8.
Oh, 4.8, yes.
4.8,
yes, right.
So that's 0.5% higher than expected. And the previous was 5.2 from last year that everyone was talking about the 5.2. So that was good. And now they came in at 5.3. So that's pretty good numbers looking to China. But the Australian dollar didn't fall that. that usually do. You know.
Yeah.
So what do you think about China? You know, you from there you have your talk point here.
Yeah, like inside information.
Yes, correct.
Yeah.
Please, because we know it's very hard to get information from China.
So it's not Aussie dollar, AUD. Not only about AUD. It also like the Hong Kong index and China 15 index doesn't move. Even they just going down, right? It is very easy because normally when you trade like Chinese stock, to be honest, we normally don't believe Chinese data. Yeah, to be honest.
True.
Yeah.
True.
Especially for GDP, it's delayed, and you don't know whether it's true or not. However, people are more interested in what the property market is going to. And yesterday, it has released the recent 70 big cities. The performance of the second-hand house still bad. And after that release, the stock market is going down quite fast. Okay. So if you want to invest in Chinese stock market, Chinese index, don't watch the GDP, but watch the property market. Yeah.
Right. Okay, that's pretty good. Now moving ahead, let's talk about gold. What are you expecting about gold there? Because we're looking at gold on a very, 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 very strong pace. We've seen gold with a 9% increase from one month to another. So counting from last month to date, we've been counting 9% already increase. Do you expect we can have higher pace on there, or what are your take?
Yeah, maybe higher level, maybe to 2,500, 2,600.
Yep.
Yes. However, I'm interested in short it because from fundamental side, I think it is too much overpriced. We can talk about the real demand from central bank. Many people think central bank is keep buying it. Yes, they keep buying, but the speed is slow.
Yes.
It's slower. Like China, they purchased 5 ton. However, last year, they buy 30 ton per month. Yeah. So they are keeping the purchasing much more slower. So that's not the main reason. The main reason is very easy. It's just a war.
Just a war.
Just France,
Poland, as well.
US, Iran are getting involved.
Yep.
And what is behind that is the fear about World War. Recently, we see the Google search globally or in United States. The Google search for World War III has reached to the highest point, which has last been seen when the Ukraine and Russia war just started. And before that is like 2020 or even that before.
Later, yeah.
So fear is not about the conflict between Russia and Ukraine or Israel or Hamas. No. The fear is about the World War. Yeah. So however,
wow, that's a big thing.
Yeah. However, when we checked, sorry.
You're right.
So when we checked Iran's attack to Israel, actually it's weak. 99% of the attack has been limited.
Nothing happened.
And after the attack, they just immediately say we have done. We done. We don't want to cause like.
So you guys know that we can if we want.
Yes.
Yeah. So yeah.
It's just like I want to punch you in the face. Yeah. However, I will tell you in first. I saw you defend and punch you, and I said, "Don't call the police."
Yeah.
It's just like that. They don't want the World War. No one wants it.
No, of course not.
So I think the gold price has priced in too much expectation.
Yeah.
And also it has been a big gap, huge gap between value and price.
Okay. Yeah, I do believe on 2.5 as well. So 2,500. I've been calling this for quite a while already. All right, moving for the last question here, we are already on the end of the podcast. So if you're liking what you're watching, then give us a thumbs up. If you have any questions for the next one, put it in the comments and share this video with your friends, right? Peter, my last question is, we saw a drop on Bitcoin from Monday to Tuesday. So do you reckon it's a good time to buy? Do you reckon it's a good time to sell? Because we are seeing a little bit of accumulation period on there.
For Bitcoin, I think it's my only, I need to say it's my personal opinion.
Okay, yeah.
I want to short it.
You want to short Bitcoin?
Yeah. However, I want to short it.
Even on the halving, okay, that's interesting.
However, I will wait when it breaks like 60,000.
Okay.
And then I will short it. I will short it until it gets to like 25,000.
What?
Yes. I think it's much more overpriced, especially when you see recent Bitcoin price go where it goes. It has a correlation coefficient with Nasdaq reached to near one +1, which means when the Nasdaq goes up, Bitcoin goes up. When the Nasdaq goes down, Bitcoin goes down.
Okay.
Which has happened in
beta
2021, which is the start of the crash of the Bitcoin. So I think historic will happen again, especially for those high sentiment assets.
Okay, well that's pretty interesting because I was expecting you going to be long it.
No, I'm always short Bitcoin.
Wow.
Yeah.
All right. Thank you so much to come, Peter. I think it was a really great talk. I think there's lots of knowledge for everyone there. You know, we've talked about the Fed, we've talked about China, we've talked about Bitcoin, gold. I think we covered all the topics. Would you like to say anything else?
Just keep caution. Even though you think the gold have a big upside trend, it will crash maybe just in several weeks.
Several weeks, yeah. Correct. So, all right, guys, have all a great week. I don't know when you're watching this video, but we see you on the next one. Thanks, Peter.
Yeah, thank you. See you.